Thanks for tuning in to A Better World. I'm your host, Luis Acevedo, and don't forget to subscribe to the blog at loseview.blogspot.com and also the YouTube channel. Hit that subscribe button down low. So I'm going to continue with this series we started yesterday on Bitcoin blockchain. We're still going to focus on Bitcoin a little bit because I feel there's a little more information that should be passed along before we jump into the blockchain and how it's distributed. So yesterday we touched on the general idea of what Bitcoin is and its purpose, and that's important. That's a fundamental thing to understand. So I wanted to get that out of the way. And today I want to talk about its design and its functionality, and well, not really functionality, but its divisibility. So in economics, there's this thing called units of account. Basically what that means, it's basically a word or something used to describe the value of something. So we call a $1 bill a dollar. That's a unit of account, but that also can be the transaction that takes place for a particular item. So for instance, I go to Walmart, I bring in my dollar bill with me, I pick up this air freshener that's $1, I then give it to the cashier takes my dollar, I then get this that's worth $1. So I spent my dollar to get something that I believe to be $1. So I get the air freshener. Obviously that's not including taxes, okay guys, I get it. 6% sales tax, I get it, it's not including it. So you get that for $1, unit of account. So Bitcoin has this as well, except it goes down into smaller units than dollar. I think I know the smallest form of currency we have in America is a penny. So that's 1/100th of a dollar, and then you have a quarter, which is a quarter of a dollar, etc., so on and so forth. Now, the smallest unit in a Bitcoin is called a Satoshi, which is, I believe, 1/1,000,000th of a Bitcoin. And then you have a millibitcoin, which is 1/1000th of a Bitcoin. So you see the divisibility in Bitcoin is much larger than that of the dollar, meaning you don't need to spend that. I'm not sure of the current price. I haven't checked it since earlier today, but around $8,600. You don't need to spend $8,600 to buy one Bitcoin. You can put in $100 and get a fraction of that Bitcoin. And so you can own Bitcoin. Now, obviously, you're just going to need to pay $8,600 to get that Bitcoin. So this is just an illustration of its divisibility. I think that's also another important factor most people may not understand, or because they just see a Bitcoin and they're like, I can't own a Bitcoin because it's $8,600, and we think of like the stocks, and not too many stocks will allow you just to get a fraction of that stock. I know there's certain places where they will, but generally speaking, you have to buy a whole stock in order to own that one stock. And so some people may equate that with Bitcoin, like, well, I need $8,600 to own one Bitcoin. But you can own Bitcoin without owning an entire Bitcoin. And that's one of the awesome functions of it. Now, there are other cryptocurrencies that do this as well. I think every other cryptocurrency, to my knowledge, has this same divisibility, not scale and size, but the idea of it is there. And I think this makes it a powerful tool because, like I said, you don't need one Bitcoin. And as of right now, we use the dollar to place a value on Bitcoin. So we say it's $8,600 to buy one Bitcoin. And that may deter some people from investing because they're assuming its value is in dollars. But it's not. Its value comes from multiple places. Just a couple offhand is the finite amount. There's 21 million, as we covered in the last episode, Bitcoins that are in existence and will only be in existence, but they're divisible all the way to one Satoshi. Satoshi, SAT for short. 1/100,000,000th of a Bitcoin. So you have way more than 21. You have 21 million full Bitcoins, but they're divisible by a lot. But there's a finite amount of it. So that gives it value, and its utility gives it value, and the divisibility, which we went over, gives it value, and also the technology it uses, which is the blockchain, which we'll get into later. But the blockchain is just a public ledger, so it's basically this network. Just really quick, this is really quick. We'll have to go more in depth with the blockchain, but the blockchain is basically this network that acts as like a public receipt for all to see transactions. Now, they don't know who made the transactions because there's a private key that's involved, but that is a topic for another day. But right now, the topic for today, what we just went over, is the divisibility of Bitcoin and trying to wrap our heads around that. We're taking this one step at a time. I want to make these episodes bite-sized. That way, you can understand it quickly and not have to spend hours watching one video to get all this information at one time. We're going to break it down very simply and concisely in every episode. So I'll do my best to keep it, as simple and use analogies that will explain, or show the similarities between things as best as I can. So that's what we talked about today, the divisibility of Bitcoin, the unit of account, the design of it. I hope you guys enjoyed it. And if you did, please like, share, and subscribe. And we will see you guys tomorrow. Peace out.